Hello there, this is fairbinaryoptions.com. I would like to take a look at the euro and the US dollar today, as normally we have quite an interesting situation. First of all, it is the Thanksgiving week in which tomorrow markets are going to be closed and volatility is going to be at the lows, but the euro US dollar is forming, from my point of view, two bullish patterns or possible bullish patterns, at least for the rest of this week. This is a 4-hour chart, but the patterns are visible on the 1-hour chart, on the hourly chart as well. First of all, there is, like the name of this analysis suggests, there is the possibility that the market forms a falling wedge with 5 different legs, 1, 2, 3, 4, 5, and then the falling wedge needs to go to the upside, and the falling wedge goes with the 1 and 3 trend line and the 2 to 4 trend line as well, and the 2 to 4 trend line as well, just like that. So this is a bullish pattern, because by the time the 1 and 3 trend line is done, the 2 to 4 trend line is broken. Normally price should keep moving to the upside, not necessarily in an impulsive move, but it should keep moving to the upside. How about in current price action, this to be the end of our falling wedge here to the downside, like this? So this to be an A, B, C, D, E, a triangle as a reversal pattern. Here is retested already and now hesitates at the 2 to 4 trend line. What is the 2 to 4 trend line? The 2 to 4 trend line starts from here and it goes all the way to the downside in here. So still has actually a bit of a room to go into the 125th level and then to break it. Ideally to see like this, to retest it on Friday with the CPI and then to jump higher. Well, this is the falling wedge, which again, this kind of fashion is a bullish pattern. Now, how about a double bottom formation? A double bottom formation is looking like this. Let me change the color. Let's make it a bit blue here. A double bottom, it is looking like this, and based on the fact that it's not able to break the lows, it comes with a measure move, and the measure move in a double bottom goes from measuring the void between the two dips and projected into the upside by the moment that the support area is broken. Well, this is the double bottom. In the case of the euro US dollar, the possible double bottom goes in here. So market comes here from the upside, makes a bottom here, being rejected, made another one, it seems to be rejected as well. So this would be, if you want, the neckline or the things to watch for the pattern. And from here to here would be the measure move. Let's make it a bit bigger. Let's make it a bit of a different color. And this should be applied by the moment that the pattern is going to be completed, as it is not completed yet. And it points towards 127 and higher levels, providing 125 is being broken. So instead of going bearish into the CPI on Friday, I would actually like to buy call options on the euro US dollar right here, right now, into the 124.50 area. So 124.53, buying call options with end of week expiration date for the euro US dollar, as this would make the case for a little bounce, if you want, into the CPI on Friday. It remains to be seen. It implies that the CPI either will be a bullish release for the euro, or it will the market will interpret it as being as bullish and will actually start to buy the euro US dollar, either based on a profit taking situation or based on the fact that the actual release is going to be better than expectations. It remains to be seen. Thank you very much for being here. fairbinaryoptions.com. Call options for euro US dollar on a move now, I would say, well above 125. Thank you and bye bye.